And a good day to all. My name is Owen McCafferty. Work with Practice Fusion, and we are continuing in our series of discussions and short narratives, enough to present an idea or two, but not so much that it's going to ruin your whole day with commitment watching a computer screen. Today's topic relates to property and casualty insurance in a professional practice, specifically as it relates to the property side. We'll get into the casualty side in another discussion, but from a property standpoint, there's a lot that needs to be followed through. Most of you operate in a professional format where you have either a limited liability company, a subchapter S corporation, or a subchapter C corporation owning the operating assets of your specific profession. So in this example, let's use veterinary medicine because they are the most capital intensive professionals. In a veterinary practice operating entity, usually configured as a limited liability company, often electing to be taxed as a subchapter S corporation, there's professional equipment, there's furniture and fixtures, computer equipment, office equipment, software, leasehold improvements possibly, and miscellaneous other tangible assets such as inventory or personal items that may be held in the practice. I'd like to talk about all of these. First of all, let's do the personal elements that are held in the practice. Let's say you have a favorite painting that you have hanging in your office waiting room that you own personally. That needs to be insured, and most probably may need to be insured as a separate rider because it is not owned by the named insured, which is basically your veterinary practice limited liability company, but you individually. So you have to have coverage for that. And that requires a frank discussion with the insurance agent and possibly an appraisal. There's inventory that may exist in a veterinary practice: drugs, professional supplies, and retail type items such as dietary pet food or flea and tick control products that need to be separately identified. We recommend that at least once a year physical inventory be taken, and that in the interim you use your practice management software to maintain a perpetual inventory record. Drug and professional supply inventory can really zoom up based on type of entity. A companion animal exclusive practice may have significantly less than a mixed animal practice, which could have either equine, bovine, porcine, drugs and professional supplies, as well as small animal practice. An equine exclusive practice may have less drugs than a mixed animal practice, but still would have quite a few. We're talking in the hundreds of thousands of dollars. Often the insurance agent is ill-equipped to provide any sort of input on value. For this reason, we strongly suggest the involvement of your practice's CPA and the utilization of the practice management software where you maintain a perpetual record of cost and adjust that perpetual record on a periodic basis at least once a year through a physical inventory count. That amount should then be disclosed to the insurance agent. Now, when it comes to things like equipment, that gets to be even trickier because some equipment has the half-life of uranium. For example, stainless steel cages, surgical tables, surgical lights, and may in fact appreciate in value, whereas other equipment, such as technologically driven equipment, such as possibly ultrasound or an MRI or CT unit, would have a degrading life because of the technology that's involved in it. There are computer items such as the software system that you're using and the tangible computer hardware that may degrade very quickly. And you have to take a physical inventory of these items. We recommend that you get your accountant involved and every 2 to 3 years go through a calculated value where the accountant will at least use some sort of estimate of actual cash value on your tangible assets. And then share that with the property records with your insurance agent to ensure that you have adequate coverage. There's other elements of coverage that need to be discussed, one of which is the building. Your veterinary practice operating entity may have signed on a triple net lease. The fact that the practice entity will take control and responsibility for paying all of the insurance. You become at risk then not only for the tangible personality, but also the real property that is being leased. This would require then that you have some idea of replacement costs, actual cash value, and all of these separate property coverages for the building. The casualty coverages, as well as the replacement of income coverages for the building, we'll talk about in another video. But as it would relate to the tangible personal property, that's definitely the practice entity's responsibility, and most probably on a triple net lease, the real estate coverage, at least as it relates to the property and the underlying liabilities and casualty coverages, would also be part of the limited liability company or subchapter S corporation or subchapter C corporation that operates. I promise to keep this short, and I will keep true to my word, but in one of our next videos, we'll talk about the real estate coverage and how real estate needs to be specifically identified and protected in the event of a catastrophe. For Owen McCafferty, I just want to say thank you very much. Remember, get your insurance agent involved, get your CPA involved, and make sure that you are being protected. Now is the time. Thank you.